We are covering these 8 top actively traded stocks that are bullish today. Our review on LCID. Lucid Group Incorporated, known for its sleek and high-performance electric vehicles like the Lucid Air and the upcoming Lucid Gravity SUV, has definitely had a roller coaster ride in the market. Today, the stock was up about 7.5%, with 175 million shares traded. On the surface, you'd think this is the kind of reaction you'd get after the company posted its best-ever quarterly deliveries, with over 3,100 vehicles shipped. But as we dig deeper, it's clear that there's more going on here. Despite hitting that delivery record, Lucid stock is still facing some headwinds. Investors are a bit spooked by a few things. First, Lucid is raising $1 billion in convertible debt, which always sends a little chill down investor spines because it could dilute share value. Add to that the fact that Lucid's revenue guidance for the first quarter fell short of Wall Street's expectations, even with the record deliveries. While weaker guidance isn't always a deal breaker, it's definitely something to keep an eye on. Another big factor weighing on the stock is the uncertainty around tariffs. Lucid produces a lot of its vehicles in the US, which helps avoid tariffs on imported cars, but it still imports parts that could soon face a 25% tariff. This could end up costing the company more and eating into margins. And if that wasn't enough, there's also the leadership change to consider. Lucid's founder, Peter Rawlinson, stepped aside, and Mark Winterhoff is now the CEO. Leadership changes can create some nervousness, especially when they happen in a time of transition like this. So, while Lucid stock is up today, there's still a lot of uncertainty swirling around the company. The capital raise, weak guidance, tariff issues, and leadership shakeup are all things investors will want to watch closely. But there's a silver lining. Lucid's Gravity SUV could really kick things into high gear as it hits the market. If that product performs well, it could help balance out the negative factors in the short term. Keep an eye on earnings in May to see if Lucid can rally from here. Our review on SMCI. Supermicro Computer Incorporated, also known as Supermicro, is a key player in high-performance computing and AI infrastructure. The company offers optimized server and storage systems, focusing on energy efficiency and scalability for industries like AI, cloud services, and edge computing. Recently, Supermicro saw a significant 10.66% increase in its stock price, driving a surge of 73 million shares traded. This jump came as semiconductor stocks rebounded from a tariff-driven sell-off, with Supermicro leading the way in the S&P 500 rally. The company has been on a steady recovery path, especially after overcoming potential Nasdaq delisting concerns in February, which boosted investor confidence. What's particularly striking right now is Supermicro's undervaluation in the market, trading at just 0.74 times its expected sales. This is well below the sector average, suggesting that the company's revenue potential might be underestimated, making it a potentially strong buy. Supermicro has ambitious growth plans, projecting $23.5 billion to $25 billion in revenue for fiscal year 2025, a major jump from $14.9 billion in FY24. Some analysts even expect the company to hit $40 billion by FY26, reflecting a robust growth trajectory. However, there are challenges. Competition in the AI server market is heating up, and Supermicro faces risks from its customer and supplier concentration. Concerns about internal financial controls have also surfaced, which could weigh on investor sentiment. Despite these risks, analysts are optimistic about the company's ability to scale and meet the rising demand for AI infrastructure, giving it a hold rating with an upside potential of 48.5% from its current price. In short, Supermicro is positioned well for long-term growth, especially with its role in powering AI and cloud computing advancements. While it faces some competition and governance concerns, its strong fundamentals and undervaluation could make it an attractive option for investors looking for growth in the tech sector. Our review on RIG. Transocean Ltd is a global player in offshore contract drilling services, primarily contracting its drilling rigs, equipment, and crews to drill for oil and gas. They operate a fleet of mobile offshore drilling units that serve clients around the world in various exploration and development regions. Their fleet includes everything from deepwater floaters to high-specification jackups, positioning them as a key provider in the offshore drilling sector. Recently, Transocean stock saw a notable 9.22% jump, with 68 million shares traded. Barclays is still holding an overweight position on the stock but has slightly lowered its price target from $4 to $3.50. Despite this downgrade, the bank's analyst, Eddie Kim, continues to have a buy rating on Transocean, signaling that there's still room for growth. However, the lowered price target reflects a bit of caution about short-term performance, especially considering the stock's current price around $2.17. Transocean's stock has been in the spotlight lately as energy market dynamics continue to fluctuate. With a price target of $3.50, Barclays seems to see some upside potential, though the analyst consensus is more conservative, rating it a hold, with a higher price target of $4.26. While the outlook isn't wildly bullish, this recent uptick in stock price could signal that investors are warming up to the company's prospects, especially as the oil and gas sector remains volatile but critical. In the grand scheme, it's clear that Transocean is still in play within the energy sector, but it faces challenges with the market's fluctuating dynamics. It's a stock to keep an eye on, especially for those looking at potential upside despite the cautious stance from some analysts. Our review on RGTI. Rigetti Computing Incorporated is a standout player in the world of quantum computing, offering full-stack quantum solutions that are seriously pushing the boundaries of what's possible in the tech space. This company's focus is on building quantum computers that operate over the cloud, which is a pretty big deal because it allows enterprises, governments, and research institutions to tap into quantum power without having to deal with the complexity of maintaining hardware themselves. Rigetti's Quantum Cloud Services platform makes it easy for clients to run quantum computations, and their hybrid quantum classical infrastructure makes this technology more practical and accessible. What makes Rigetti so interesting in the space is that they're not just talking about quantum computers, they're actually building them. They develop their quantum processing units, QPUs, in-house, using silicon-based chips and superconducting qubits. This is all done at their facility, Fab 1, where they design and manufacture the hardware. The company is also pushing the envelope in integrating quantum systems with classical computing, which is where the real-world applications start to get exciting. Think finance, pharmaceuticals, and other industries that are eager to harness the power of quantum computing. So, let's talk about today's big news. Rigetti's stock surged by 11.07% after they were selected for a massive project under the U.S. government's Quantum Benchmarking Initiative, led by DARPA, the Defense Advanced Research Projects Agency. This program is a huge step forward for quantum computing, as it aims to determine whether quantum systems can scale up to utility-level operations by 2033. The program is set to explore various quantum architectures, including Rigetti's approach with superconducting qubits, and is geared towards figuring out whether quantum computing can move from being an exciting concept to an actual, viable technology. For Rigetti, this isn't just a feather in their cap, it's a game changer. Being part of a government-backed initiative like this is not only a recognition of their technology but also an opportunity to prove that they can scale and solve real-world problems. The fact that they're getting involved with the Defense Department means that their quantum tech could have national security applications, which is a pretty big deal in the tech world. But it's not just the government's interest that's driving investor optimism. Rigetti's been gaining traction with analysts too. All 6 analysts currently covering the stock have a buy rating on it, and the average price target is $14.80. Which suggests a nearly 100% upside potential from where the stock is trading now. That kind of confidence from analysts is no small thing, especially in a space as volatile as quantum computing. What makes this so compelling for investors is the vision Rigetti has for the future of quantum computing. They're not just looking to sell computers. They're building the infrastructure to enable industries to integrate quantum computing into their day-to-day operations. Hybrid quantum classical systems could be a game changer for industries that need supercharged computing power, and Rigetti is right in the thick of it. So, yeah, today's jump in Rigetti's stock price is a reflection of the growing excitement around the company's progress. The combination of being selected for the DARPA initiative, having strong backing from analysts, and continuing to push the envelope on practical quantum applications has investors buzzing. If Rigetti can continue making strides in this high-stakes race to develop scalable quantum technology, it's likely that this momentum will keep building. In the grand scheme of things, if you're looking for opportunities in next-gen technology, quantum computing is definitely one of the most exciting frontiers. Rigetti is carving out its space in this emerging market, and with today's boost, it's clear that investors are beginning to take notice. It's one to watch closely as the world of quantum computing continues to evolve. Our review on IONQ. IONQ Incorporated has been making waves in the quantum computing space, and for good reason. They're not just talking the talk, they've got working quantum hardware that's already making an impact. The company's flagship products, the IONQ Forte and IONQ Forte Enterprise, are top-tier systems with 36 algorithmic qubits, which is a huge deal in the quantum world. These systems are built to tackle some of the most complex commercial and research use cases out there. And what sets IONQ apart is that they aren't just building these powerful machines in a lab somewhere, they're giving users access to them via major cloud platforms like Amazon Web Services, AWS, Microsoft Azure, and even Google's Cloud Marketplace. This means their quantum computers are accessible through a cloud service, making quantum computing as a service, QS, a reality for businesses and researchers. IONQ's cloud-based approach is a big deal. It's not just for the elite tech companies anymore. Anyone with the right cloud access can tap into these powerful quantum systems. And with the quantum computing market heating up, IONQ is positioning itself as one of the key players that can bridge the gap between theory and practical, scalable solutions. So, how's the stock doing? Well, despite some ups and downs, IONQ's stock jumped by 10% recently, signaling some growing investor confidence. Analysts are largely optimistic about IONQ's future. Out of 6 analysts covering the stock, 4 have a buy or strong buy rating, and only 2 are taking a more neutral stance with a hold. The average price target for IONQ sits at $41.60, which implies a massive upside potential of over 100% from where the stock is trading right now. That's a pretty strong signal that analysts believe there's a lot of room for growth, especially as the quantum computing market continues to evolve. What's really interesting is that IONQ isn't just another startup in the quantum space. They've already got real commercial partnerships with giants like Amazon and Microsoft, which adds a layer of credibility and trust that's hard to ignore. The fact that IONQ is already collaborating with these major players in the cloud space gives them a big advantage in terms of access to customers and expanding their network. For investors, the growing number of positive analyst ratings and that solid price target show that IONQ is seen as a strong player in a rapidly advancing industry. If quantum computing really starts to take off and live up to the hype, IONQ is positioned to be one of the leaders in the field. There's a lot of potential here, and as the company continues to develop scalable, real-world solutions, it could be a major player in the next wave of computing technology. So, while quantum computing is still in its early stages, IONQ's track record with working hardware, major cloud partnerships, and the optimism from analysts makes it one to keep on your radar. With the stock up today and analysts projecting strong growth, it's clear that investors are starting to take notice. Keep an eye on this one. It's got some serious upside if the technology continues to prove itself. Our review on X. United States Steel Corporation, a major player in the steel industry, has been at the center of a significant development that's shaking up its stock performance. Known for producing a variety of steel products across its different segments, including North American flat-rolled, mini-mill, and U.S. Steel Europe, the company has been making waves not just with its operations but also with a potential acquisition deal. So here's the scoop. The Trump administration recently ordered a fresh review of Nippon Steel's proposed acquisition of U.S. Steel. This has sparked a big move in U.S. Steel's stock, which shot up by over 16%, gaining nearly $5 per share. The White House directed the Committee on Foreign Investment in the United States, CFIUS, to dive deeper into the deal, assessing whether any national security risks posed by the acquisition can be adequately addressed. This latest twist is significant because, after months of speculation and concerns, this new review brings the deal back into play and gives it a shot at approval. With this renewed momentum, U.S. Steel stock has been rallying, and investors are clearly reacting positively to the possibility of this deal getting through. But what's fueling this surge? A big part of it seems to be the support from U.S. Steel's own workers. While there were initial concerns about Nippon Steel's role in the U.S. market, the tide has turned, with workers now more favorable toward the deal. The Japanese steel giant has promised a significant investment to upgrade facilities, which has resonated well with the workforce. This shift in sentiment from opposition to strong support has been a key factor in increasing confidence in the deal. For investors, the potential deal, valued at $55 per share, represents a 44% premium over U.S. Steel's previous closing price, which is a pretty solid upside from where the stock was trading. If this acquisition goes through, it could be a game-changer for U.S. Steel, especially with the promises of reinvestment and modernization. With the market in turmoil and the broader economy in a bit of a rough patch, this news has provided a nice boost to U.S. Steel's stock. Investors are jumping on board, and with the added potential of the deal's approval, the upside here looks promising. If you're watching U.S. Steel, this new review is something to keep an eye on, as it could really determine the company's next steps and market trajectory in the coming months. Our review on OKLO Inc, an innovative player in the nuclear technology space, is making moves that have caught the attention of investors. The company is focused on developing next-generation fast fission power plants, aiming to provide clean, reliable, and scalable energy solutions. With a product lineup that includes their flagship Aurora reactors, Oklo is working on a solution to power everything from data centers to industrial facilities with clean, 24/7 energy. Now, let's talk about what's driving Oklo's stock price right now. The company has been making headlines with its efforts to scale its operations and expand its capabilities. Recently, their stock surged by 10.76%, with about 20 million shares traded. What's fueling this jump? A big part of it seems to be their continued progress in both fuel recycling and their collaboration with the U.S. Department of Energy and national laboratories. These partnerships are crucial, as they're helping Oklo refine their technology to be both more sustainable and efficient. What's especially exciting for investors is the potential of Oklo's reactors. The Aurora reactors are designed to run on both fresh and recycled fuel, which means they could be more adaptable than traditional nuclear tech. Plus, they're aiming to produce anywhere from 15 to 50 megawatts of electricity, with plans to scale up to 100 MW. This scalability opens up the potential for Oklo to be a key player in the clean energy sector, especially as the world looks for more sustainable energy sources. And there's another angle here that's worth noting. Oklo is also looking to address the growing shortage of medical radioisotopes, which are used in life-saving treatments. This could open up another revenue stream for the company, providing them with the opportunity to diversify their business and tap into industries beyond energy. For investors, Oklo's recent developments and the steady momentum they're building could be a solid sign of things to come. If the company continues to progress on its goals, particularly with the Aurora reactors and its medical isotope capabilities, there's significant upside potential here. So, with the stock moving up, it might be a good time to keep an eye on Oklo as it works to scale its game-changing nuclear technology. Our review on KOS. Kosmos Energy Ltd is a deepwater-focused oil and gas company with a strong presence across key regions like Ghana, Equatorial Guinea, the Gulf of Mexico, and Mauritania/Senegal. The company is all about full-cycle exploration and production, making it a significant player in the offshore energy market. Its diverse portfolio covers everything from offshore production in West Africa to gas projects in Mauritania, which positions it well for growth in various global markets. Recently, Kosmos saw a notable 12.5% jump in its stock price, thanks in part to the announcement that it will release its Q1 2025 financial results on May 6. The company plans to host a conference call and webcast on the same day to discuss the numbers, with a 90-day replay available for those who can't catch it live. This move underscores Kosmos' commitment to transparency and keeping its stakeholders informed, which is always appreciated by investors. Given the positive stock movement and the upcoming earnings release, investors are clearly paying attention to how Kosmos performs in Q1. If the results come in strong, it could signal more upside for the stock. With the company's solid operations and market presence, all eyes are on that May 6th report to see what's next for Kosmos Energy. Please subscribe, give the video a like, and watch more from our playlist. Thanks.